Hello everyone, welcome to Wednesday's free market report. We can see here, no surprise, S&P's moved very quickly up to the yearly highs or a couple of points below it. Volume was okay as well yesterday, so we got a sort of spinning top as we got to the high, so no surprise we're getting a little bit of overhead resistance at the levels we've been discussing for the last sort of 2 or 3 days, around about the 1147. We was a bit below that, I know. One thing that's sort of boding pretty well, the US indexes really are leading their European counterparts and looks strong, and probably that's no surprise with what's going on in the Eurozone. But if you just look already, even though the S&P futures haven't broke out, the Russell futures have. You can see them broke out quite nicely, and sort of any pullbacks to 647-ish look a pretty decent level to get long. Not sure I'm going to initiate that straight away. We'll just see what sort of comes out today. You can see the Nasdaq also has jumped the gun and is just, a bit behind the Russell, but it's just nudging through its highs. One that's lagging a bit is the Dow Jones E-mini. Look at the futures contracts here, and you can see that's lagging a bit off the highs. But you can see these are all, doing a lot better than if we take a look at the DAX, for example. Get the correct ticker symbol in there. DAX. See the DAX way off its highs, and Euro stocks similar. So you can see there US index is certainly the stronger, and as I say, probably no surprise of everything that's going on currently in the Eurozone. I'm just going to get let's get the right stock up. Let's get Goldman Sachs. I wasn't in the live trading room yesterday, and of course it was a killer day. What we do from here, we took the gap play. For those of you who aren't members, don't come in the live trading room. At the open, we wait for stock that are sort of heavily traded, professionally traded. Goldman Sachs, Apple, Google, RIM, MasterCard. And you can see I just have them all lined up there. I'm looking for the gap. Then what I'm doing is, we took the gap play. We wait for a 60-minute candle to form. We wait. We put a buy stop, 0.25% above the highs. Reason being, we don't want to get pulled into a bull trap. Market makers will sometimes bid the market up to offload a position, and you sort of like people pile in. Goldman Sachs is gapped up, in they go, they buy, and of course professional traders are selling into that strength after bidding the market up, and then bang, comes off and holding a sucker trade, which is always a really nice feeling, makes you feel warm inside, and it's just really just a little bit of sort of market experience. And I'm doing a series of podcasts actually on market experience, finding your niche, because we get a lot of emails from traders who are struggling, and one thing we would say is we've been through it ourselves, and a lot of our clients have, and you can get through it. Sometimes it really can be a matter of just going through your whole learning curve at the right pace for you and finding a sort of niche in trading. There's so many different styles of trading, as you probably know by now. You can be a very intense intraday trader, not interested at all in the fundamentals, not interested at all in any market information other than key data that's being released that day that can move the market. Or you can be a longer term fundamental trader, just a pure swing trader. And there's so many different styles that can suit your personality. Just watch out for those podcasts. So really here, nice little trade. What you do, a couple of things. When the S&Ps get near the highs, you can start to peel off, or a close below the 21-hour EMA. So far we got long at 163.30, sold half at 168, and we've got another half. We've got a stop to break even, but now what we do is we bump it up. A close below the 21-hour EMA we get at, and we just did that as well. We had the same trade with Apple as well. Sort of come back here, probed where our stop is, but we haven't got a hard stop. It's just the close below that level on a 1 hour chart we're at. Again, of course, no surprise, big bullish engulfing. So you just put your 8 and 21 EMAs on there and just monitor these sort of trades. But the trades you can look for, so gap up, gap down at the open, take the highs and the lows of the 60-minute candle, and then obviously if it's gapped up, you're putting a buy stop just above the market, or you can just set an alert, so if it triggers through your filter above the highs, whatever you use, 0.25%, 0.5%, then you can go and buy options as well. So it's just a simple, nice trade that works pretty well. Okay, everyone, I will be in the live trading room today at 2:30 UK time for the US Open. As always, if you have any questions, Martin at thegeniustrader.com. If you could allow 72 hours for us to get back to you. We are getting a high level of questions, and we're simple souls here, and it takes us a while to answer them. I think that just about covers everything. I am going to be adding some new videos, definitely to the members area, tutorial videos this month. Look out for them. Look out for the podcasts. Have a good day's trading. Look forward to speaking with you tomorrow. Till then, happy trading.